Morning, Tyro. Morning, Missouri. I am currently paper trading, but I am gonna make a live trade today. Oh, maybe not. Hmm. Should be able to log into. Well, seem to have forgotten my. Password. Morning, George. Sulk. Ashlita. Oh fuck. What is my? What did I change my password to? Well, looks like I have not heard about TradeNet. Yeah, I'm trying to figure out what I changed my password to on my live account. I just emailed them. Maybe, hopefully, I can get it lined out before the day starts. TFS Trader is the software that I'm going to be using from my live account. TEFS Trader is a modified version of Colmex Pro Trader, and it's being leased. TradeNet, which is my broker, is leasing Colmex Pro, and they've made their own trading software or trading broker software called TEFS. It's good, Ashita. I study as much as you can. If you be the the best traders are the ones that get totally obsessed with it and do it 24/7. Um, I don't even know how much time I've spent studying. It's an ungodly amount. I need to get my passport done too, though. I'm going to the Caribbeans later this year, and I have to get a passport. Where are you going? Ooh, might have a play on MU. Nice. Yeah, eventually I'm going to get to Europe and then just travel everywhere through it. So we're currently swinging MU long. I'm up $70 on it already in the morning on the open. Yeah, my goal is to trade from anywhere. I want to be able to travel the world. Yeah, this thing's messy. That'd be cool. My first stop's probably gonna be Thailand, just because it's so cheap to live there. I gotta pay off my credit card debt first, though. I quit my job and tried to start my own YouTube channel and make passive money, but at the time I didn't know shit about money or passive income or stock market, and that plan totally failed. And I blew up a bunch of money in savings and racked up a ton of credit card debt. But as soon as that credit card debt's gone, I am out of here. It's better in Indiana. I can take rain. All right. Got a good range on Twitter. I'd love to see it spike up. Let's see. 2-point range on Twitter. Yes, Guy, I will. I don't know how it's going to work though, because I know that there's certain rules in different countries, so I might have to run through a VPN. That's something I haven't set up yet, but I mean, it wouldn't be too hard. But I don't like VPNs because it usually adds delay and lag. Ooh, Tesla. Tesla's going to be an interesting open. Could be a potential breakdown into a new channel. See what Tesla does. Right here, I have it in my watch list. So if you click on the little gear icon, customize, type in shares, boom, right there. Now it doesn't tell you the float. The share size and the float is different. A lot of times companies will have they will own the private investors or inside traders will own shares of the company, and those shares aren't heavily traded or they're not in the open market, so they don't account for the float. If that's something you definitely need to learn if you are wanting to trade low cap stocks, float stocks. You need to understand the difference between float and shares. But yeah, I'm in the same boat. I've been to Florida, Georgia, Wyoming, Michigan, and Ohio, which is not anything special, and Chicago. That's about it. I've not done a lot of traveling in 28 years because I was working my ass off for 12 years of it in a foundry. So my ultimate goal is to be financially secure enough to just travel and go and do whatever the hell I want for the rest of my life. All right. We're getting a bull trap, possibly a trend reverse on SQ. Barely missed that long entry there. That would have been nice. I'm going to be down in Florida for EDC. Orlando, more than likely. I do really want to go to Europe though, because you can travel. The cost of traveling through Europe is so cheap compared to America. I mean, well, I guess you can travel, but America's is so fucking big. There's so much space in between the places that you want to go. Whereas Europe, I feel like it's much more condensed. want to do Africa too, Cape Town, and I barely missed this yen trade. There've been 3 points right there, or no, 2 points right off that yen swing. I wonder if Laura got into K-Web or yen. All right, Gush. I don't trade a whole lot of low caps. I used to, and you can do it. There's nothing wrong with it, but I don't see trading low caps as your account grows and as the amount of size you put into trades grows, low caps become more and more risky as your account grows because low caps can fade out in volume, and that's not a big deal when you're trading a small size, but the spreads can change quickly on low caps, and when you're trading with a lot of size, you can get locked and trapped inside of a trade. So I, there are people that do trade low caps very successfully with high volume and high share sizes, but in my opinion, it's too much risk for it's too much portfolio risk for the profit. But you can argue with that all day. There's tons of people that would disagree with me on that. I'm trying to build more of a strategy where I can I can keep my portfolio risk low at like 3% or less, or maybe 5%, but I can enter into these trades are so slow moving that I can manage 3 or 4 of them. So I can, over a year's span, if I trade 2 to 3 every day, I will trade, I will have more trades accumulating me money in a year's span versus if I was to just trade one low cap with a lot of volume or a lot of share size. And it's more just like a portfolio risk management decision more than anything. Why I kind of veered away from low caps. But low caps are really good for building a small account. Deckmar trades. I don't know if he's done one lately, but sometimes he will do like a $2,000 or $4,000 account um, challenge, and he's so good at the patterns that he can build a $4,000. I saw him build a $4,000 account to 25 grand in a month and a half, I think. So you can do it, but it becomes exponentially more dangerous as the account grows and gets bigger. Like when you're at like Steve Dux's level and you're trading or Tim DeCristani and you're trading $2 million or $4 million, that's a lot of money and a lot of portfolio risk for that style of trading. It's much safer to take like Ricky Gutierrez's style where you trade with only 30 grand every day, even though Ricky probably has way more than 30 grand, because the portfolio exposure is just too massive when you get up to that amount of money. But if you're trading the style I'm trying to build, hopefully will scale into a higher account size much more efficiently when you get up into those numbers. I'm trying to specifically day trade, but I will get into swing trading. I will definitely get into swing trading when my account grows. when I've got like a good amount of money to swing trade, you'll see me doing it a lot more. Like I was talking to Laura yesterday on Yen and KWeb. Let me pull up KWeb. So this is a ETF that tracks the top internet companies in China. Maximize. So this is the year chart. We've got a triple bounce here. You measure from the bottom of this resistance to just here. That's 4%. Up here is 9%, 12%, 16%. That's actually not a whole lot, but if you're using leverage, it can be really good. Now yen is a 3 times ETF, and yen is doing the same. It's almost down to a 52-week low. If you measure the bottom of this resistance up to the previous triple bounce, that's almost 30% right there. So if you're trading with a $100,000 account and you swing trade this for you make 30 grand in that one swing trade. If it runs to here, you make 56 grand. Now, I was also studying yesterday something called protective puts. I'll just pull it up. So I was studying option trading because you can use options to hedge your long positions in a trade. The way this works is hedging is basically buying insurance or protecting your trade for a certain set. So there's three types of options trading that I'm studying right now. The first one is a covered call, and I think this video is really. Here, I'll post the links if you guys want to watch them. Covered calls are designed to make money when you own a stock and you plan on holding it for an extended amount of time. You basically buy the stock and then you sell a covered option at a higher price every day, and you just let it run out for the day. And it's like you buy the stock long and you make money on it going long, but you can also sell a covered call each day, and it's out of the money every at the end of the market close, and you just make like a cash flow on each day. It's kind of like just making money. You sell a call to someone for a fixed price, and as soon as you sell it, you make money from it. But the risk of that is if the stock goes above that call, you start losing money. But if you own the stock, if you've already bought the stock and you're selling the call, and the price goes above the call mark, you're covered. Like you covered it. That's why it's called covered call, because you mitigate the risk on that call. So that's one. The other one is a protective put, and there's not too many good video put options now. Where's that one video? I think I posted it on Discord. Where's my Discord? Yes, this video.
Okay, so being a trader can really suck at times, especially
so protective
when you're losing
puts,
a lot of money or trade.
This video will explain it to you, and like it'll explain both the protective puts and the covered call. And then the last one is called a collar, and a collar is a combination of a protective put and a covered call, along with a long position in the stock. But real quick, a covered call or a protective put is basically, if you go long on a stock here, you can buy a put option for the same amount of shares, and and basically you're paying for an insurance premium. So let's say I went long for 100 shares on yen, and then I immediately bought a put option. I bought a put. A put is basically saying, which one's a put? let's say 100 shares of yen would be $2,300. So it would cost me $2,300 to get into this position, but I could buy a put option which will cost $100, and it locks in a set amount of risk for that trade. So if the trade goes south, I have if you have like a massive gap down for whatever reason, which is very common with like these 3-time ETFs. This gap right here is a 6% gap up. What's the biggest gap down they have right here? So this gap down is 5%. If you're trading a $100,000 swing on yen, that's instantly lost $5,000. But you can buy a put call, or you can buy a put that basically says it locks in your risk to a flat like $2,000 loss no matter what. So even if it gaps down 5% or 10%, it's covered and you're protected. That's why it's called a protective put. So I'm trying to learn how to use options to hedge against swing trading, especially when it comes to these ETFs. So eventually I will be getting into swing trading pretty heavily in the future. And I'm actually probably going to swing trade yen or CWeb within the next few days on my Robinhood account. Yes, a put is betting it's going down, but you're going long in a long position, so you're basically just buying insurance that way. So, and then a collar is a combination of both or all three. I haven't really learned collars yet. I need to still study a protective put as well. But let's check out. So the protective, I can buy. This is a 3-week put call on yen. Current price is $24. What's $30 trade? So I could buy a protective put. I'm still not sure exactly how the money is generated with options though. I need to study options a lot more to get a good grasp of it. Dollar option. It depends on the style. It depends on the option that you use, Todd. It can limit your profits, but that's not necessarily a bad thing because I mean, when you trade a stock, you're always setting or if you're doing it correctly, you always have a point where you're going to sell out. You have your price target if you're trading correctly and you're not just gambling. So if a really good trade on yen right now would be back up to this triple bounce. So if you bought a put call around $29, that's your price target. So your profit that is locked in, like once you hit your put call, you can't make any more money. But you've effectively made your money anyways because you have the long position this way. So it's not really, you know, I get your argument. You limit your profits, but you limit your profits naturally anyways when you're trading because you always have a point where you're going to sell out. Like right now, I'm trading MU. I'm swing trading MU long. My sell position is around $54. Like once it gets up there, I'm going to sell. And I could buy a put option just above that. And my strategy has not changed at all. I've just bought some insurance to make sure that I am covered in case the stock goes the wrong way. in. Probably going to get some consolidation on yen. I want to see it break down back to this resistance line so I can stack into it. Yes, George, but I was gonna do a live trade, but I forgot my password. I've emailed support, which I'll probably just have to call them in about 15 minutes. Yeah, I don't even do that, Todd. I need to learn how to do analyze the options and stuff for stocks, so I can get a better idea of. Do you have a video, Todd, of how to check the options like that for swinging or for going, long or short in a stock? That's a rough trading day. Bartend and then stay up and trade in the morning. You must wake up at like 6 p.m. I personally operate best though, honestly, at like 1 in the morning for whatever reason. Well, I know why, because I never cared about school and always stayed up till 3 a.m. playing video games. Is there a video though on how you do it specifically, Todd? Like, you have any good videos on that? Because want to, I want to be able to look at the options and I want to be able to understand, which way people think that a stock's going to go. Is there a video? Who'd you learn it from though? Did you watch a video and learn it, or did you have a mentor teach you it? I wonder if I can short K-Web. Probably not. You, they have some good videos. I like Bullish Bears. I think my friend who I'm going to be interviewing, he actually paid for some private lessons from the guys that run Bullish Bears, I believe. or maybe that was Eat Sleep Profit. I can't remember. Morning Rhyme. Okay, I think today I'm gonna have a short live stream. We'll just go till like 11 because I need to do a lot of admin stuff on the Discord server. For those that have not yet gotten an invite on it, and for those of you that are in it, there's not a whole lot going on in it right now because I'm still building the infrastructure. But eventually we're going to get to the point where we're making calls every morning, and we're going to have like a set list and everything. I just haven't gotten to it because I've got so much to do. I still got to write a whole bunch of things for the new member stuff, and the info on each rank. Where's my invites? Okay, for those that want to join the Discord that haven't yet, there it is. And right now the member list is pretty small. I think we've only got like 70 members, but once I make a dedicated video, like some of my other YouTube videos, and it hits like 50,000 or 100,000 views, there's going to be a massive influx of members into the community. So I'll probably wait a month or so before I do that, just because I want the community to kind of be built and start getting a set everybody kind of just get into the flow of how the community works before we start having massive influxes of users. That's entirely the intent, Todd. I am. Do you mean like real penny stocks, like OTC penny stocks below 10 cents, or are you talking just about low float, low cap, doctor? Because I'll trade $1 to $10 stocks if I like the pattern and the setup, but I'm currently mostly focusing all my attention to these mid cap and high cap channel trading strategy. Yeah, I'm excited to see where the community goes in about a year or so. Yeah, that'll actually be one of the things that we'll be doing, Ashlita. I've already got the channel set up for that. Review trades. So if you want, you can post your trades and your entries and exits. You can post your videos if you stream it, and people will go over it. Now, currently, it's only me and Mac that are, the people heavily invested in, helping out the community. Jigsaw and Jason are also helping out a lot. And our first FNG is actually Zencone because he's been really on it lately. But we'll have to build up the people that are profitable and successful traders, so that way they can help out the newer members. But that's exactly what Review Trades is going to be designed to do. And live streaming, if you've read the book Trading in the Zone, no, not Trading in the Zone, Daily Trading Coach, he talks about recording your own trades and rewatching them so that you can watch your emotional state and record your emotional state when you're trading, because a big part of trading is the psychology of yourself. So by being able to watch yourself live and rewatch your trades, you can learn a lot on the mistakes you might be doing or things you need to improve on. That's actually something that I used to do when I was doing uh, competitive video games and professional video games. I would always rewatch my replays so that I could learn my mistakes and learn where I screwed up and improve my gameplay. And by doing that, I actually was first in the world in a game for about 2 or 3 months. It helps out tremendously to watch your performance. Pretty much all professional athletes, too, in any sport will do that as well. I played a lot of games competitively. Um, Company Heroes, Call of Duty, way back in the day, like old school about Call of Duty 4. The game I was first in the world at was there wasn't really a big competitive scene, but it was Godfather 2. I had like a for some reason I was insanely good at that game. I don't consider myself like a top tier fast twitch or flick shooter, but for some reason on Godfather I ran like a five or six kill to death. It was a ridiculous amount, and I have no idea why I was so good at that game. Uh, and that was on console. And then I've done what else have I played competitively? I just don't like the competitive scene unless, especially back in my day, because I grew up before Twitch, so my heavy video game days were all before you could make a ton of money streaming and all that. And there's just a lot of toxicity and drama and bullshit that comes into play with the competitive scene, so it's not really that enjoyable. Yeah, I played League of Legends, and I used to play with. I think my rank was only like silver in League, but I would play with golds and platinums sometimes. Some of the friends that I would play with. League of Legends is that if you want to have fun and enjoy yourself, competitive play in League is not the way to go. I would say my most consistent and best gameplay though is definitely RTS games. I played the first video games that I ever played when I was like 4 or 5 years old was Command and Conquer, Red Alert, and Warcraft, and I think that's really those video games are why I've really enjoyed stock trading. And some people say that they can't follow me when I'm flipping through these charts and stuff, but that comes from my background in playing a ton of RTS games because they're all just micromanaging and shifting your focus constantly to different uh, minute details. USLV. I was playing a league for a little bit with my roommate probably 2 or 3 months ago, but it's like crack cocaine. It does absolutely nothing for you, and waste my time. It's not helping me get my goals right now in life, so I'm not playing it. Yeah, you could, if you want to, the easiest way to record your videos, download this software right here called OBS, and then just watch a 15-minute video on how to set up the streaming right here to your YouTube channel. It's super easy, real simple. You have to set up the windows and stuff. So I've got my capture, my main screen, and then you can also do like secondary screens. And then you just turn on OBS. When I start streaming, I literally turn on my monitor, open up my dashboard on YouTube for live streaming to change my thumbnail, which you won't even do if you're going to keep it private, and then hit start streaming, and then I just instantly start streaming, and everything that happens on your monitor will be recorded and put on YouTube, and that way you don't even upload it to YouTube. It just goes straight there. You don't have to record it on your computer and then upload it later, and it has to sit there for 2 hours to upload. It just goes straight to YouTube when you're done with it. Nope, it's totally free. It's probably the best streaming software there is too. My approach to penny stocks. Penny stocks are, if you're talking about low cap, low float from like 50 cents, either 50 cents or $1 up to $10. Low float, low cap stocks are very good for a small account if you get good at the strategy and the patterns. I've watched Decmar trades turn a $4,000 account into a $25,000 account in a month and a half, trading $1 to $10 stocks. So it's a perfectly good strategy for small accounts to grow quickly. It's definitely a growth strategy. The downsides of penny stocks and low flow stocks, depending on the type of strategy that you use on them, is they become exponentially more risky the larger your account size gets and the heavier your share sizes gets. So let me throw up another watch list real quick, or we'll just pull up current trade. Let's pull up low float. I actually have Decmar's email right here for today. We'll check out what he's watching. So Elon, you. PCB, TRVN, TN. So these are the stocks that Decmar is watching currently. We got a 4 million float, spiked up to $8. It's above its. Looks like it was a stock split. Yeah, $4 to $8. So that's a stock split. GEMP is a 12 million float, spiked to $15. So it's already gap filling right about here. So this is actually a pretty good. I like this pattern actually. So gap fills are pretty good trades. So the dangers of these low float stocks is one, they're low float. So you can make a lot of money when they move because, there's already 1 million shares traded on this 14 million share stock. And that means that, if 1 million shares have traded pre-market already, that's almost 10% of the total stock. So that stock is going to move rapidly on that. Now the 4 million share float is going to move even more. So these patterns and these strategies are really good if you want to grow your account fast, but they do come with a lot of risk. And that risk becomes exponential. It's an exponential curve as your portfolio grows. So, if you got a $1,000 account and you're trading GEMP, you know, $1,000, it's at $10 right now. That's about 900 and wait, is that 90 shares, something like that? Yeah, 95 shares. So 95 shares when it's trading a million is not a big deal. But if you're trading like steep ducks level of money, if you're trading like $500,000 per trade, divided by $10, that's 50,000 shares. That's, the per minute tick right now is around 50,000 shares. So if you size into this trade with 50,000 shares, you're going to move this stock a lot, and you're also going to be your portfolio amount is heavily exposed, the $500,000, and your your chances of getting locked into the trade or getting stuck because the volume tapers out, because that's usually what happens with these low float stocks, is all the money's made in the market open, but if you don't get out or size down as the day continues, the volume will trickle out, and this will start to become like 5,000 shares every 2 minutes or 10,000 shares, and you can lose a ton of money because of this by getting stuck into trades. If you've studied any of the big penny stock and low float traders like Tim Bertani and Stephen Ducks or Michael Good, any of the Tim Sykes students, they talk about getting stuck into trades sometimes, and it's a very big risk of these stocks. So, as your account sizes grow and you start trading with heavier and heavier size, your potential risk also exponentially grows. And that's just something that I don't really find a lot of interest in for when I get up to that. I would rather build a strategy now when my account's small and get really good at that strategy, so that way it scales very well into those higher share sizes. So by trading a channel strategy, I could trade SQ today, which is $61 per share. If you've got $500,000 that you're trading at $61 a share, that's only 8,000 shares. And SQ, what's the average trading day? 10 million shares a day. So 8,000 shares. You have no liquidity issue with trading SQ, and you can trade even higher. Like if you've got big money, you can trade something like Tesla, which is $390 per share. So $500,000 divided by 350, 1,400 shares. The average daily volume is 9 million shares. So your liquidity issue is non-existent. It doesn't matter. You don't even have to worry about it. It's just, as coming from a mechanical background, I always try to remove as many variables from something as I possibly can, because simpler is always better. If you have to manage your the float and the volume traded and everything, that's just one more complication that you have to be conscious of, and it drains you throughout the day when you're trading day in and day out. So that's the main reason why I have veered less away from the low float stocks and more towards channel trading and mid cap and high cap stocks, because it will scale much better as the account grows. But again, there's lots of people that will argue all day about that opinion, and you can make a lot of money trading low cap stocks. I'm not saying that you can't. It's definitely a very viable strategy, especially for a growth strategy on a small account. And on top of that, you can also, because these stocks move so slow, and you've already done your due diligence, and another issue with penny stocks is you kind of have to wait for the patterns to form before you trade them. So GEMP, like this pre-market movement, you could go long here and size into the trade on the gap fill up to $18, which I like gap fills. Gap fills are probably one of the highest, one of the more profitable and consistent patterns in these low cap stocks. Like I love gap fills actually, but there's other patterns like let's see if I can find one. This one, SPCB, it's gapped up to it's currently at 190. So you got all this choppiness right here on the daily. So the stock could go anywhere, and you don't like it's so inconsistent, and there's also no volume here on the daily. So like you don't have a set channel, you don't have a set resistance and support lines because these stocks are inherently shitty and they're choppy and they usually have very terrible volume. So if you're trying to pick your entries and exits, it's much more difficult, and you have to do it on the fly as you're trading the stock. And because of that, you usually only trade one penny stock a day, and you're only focused on that one stock. So, and if you study the highly successful penny stock traders, a lot of times they won't even make trades majority of the days of the week. I know I watched an interview with Stephen Ducks where he said that week that he traded, he only made 3 trades. Now he made like 80 grand off those 3 trades, but that's because he knows penny stocks and he's really good at it. But if you're looking at growing a portfolio over 10 years, not being able to trade, this can be argued by doing the math, but I would much rather trade 3 times a day every day for 10 years on a channel strategy that I know my set risk and I know my set percent win loss and everything, because I can just not really fire and forget because you got to manage the strategies, but I can trade 3 stocks. I traded 3 or 4 stocks yesterday they were all green yesterday. And I've only been practicing this strategy for a month or 2 now, about a month. So, a year or 2 from now, when I'm still trading this strategy, I'll be able to enter into 3 to 5 stocks every single day. And even though some of those stocks might only make 3%, 6%, when you compound that growth per day over 10 years, the portfolio curve theoretically should be much better than only trading penny stocks 3 times a week, if that. And on top of that, you have much bigger losses on penny stocks because of the liquidity issues. Like if you look at, let's go to Profitly. Trades. See the biggest members. Let's check out Stephen Duck's profit. So this is Stephen Duck's portfolio curve since he started 2016 to 2020, $20,000. So he actually hasn't had. He manages his risk really well. So this is actually a pretty decent portfolio curve. I don't know what was going on here. He must have just taken a break and did some. After his first $1 million, he took a vacation and enjoyed his money. But he actually has a really good portfolio curve on low cap stocks. But let's check out Tim Grittani's. I guarantee you his doesn't look like it. Hi, Clown. No, he This is weird. I know he's lost multiple $100,000 days. Although that must be the $100,000 day. Yeah. So these big spikes right here, I guess he manages his risk pretty well too. But these choppy trades, you're much more at risk at having. If you have like, if you should definitely study compound curves and understand how detrimental having like 5 consecutive losing trades at like 5% of your portfolio can be. So if you had 3 to 5 red days of like this big of a gap down, this is probably what's 200,000. What is that? 2,360 to 3.6 to, we'll just call that even, down to, so he lost 300,000 minus 2 0. He lost about $270,000 that day. Divided by 2, 2 0 0 0. That was a 11% loss on his portfolio that day. So if we, can I zoom in on this? That gap down is 11%. If he had 5 red days at 11% loss, his portfolio would be back down to the halfway mark. And if you understand compounding curves, it took him July, almost an entire year to go from 300,000 to $1 million. So when you expose your portfolio to heavy risk sizes, you don't want to look at it as losing money. You want to look at it as losing time. So if he lost 3 or 4 trades at 11%, he'd be back down to his July 13th. So he essentially lost an entire year of trading if that theoretically happened. And that's why it's so important to be conscious of your portfolio's risk and exposure. And that's what I was explaining all the past 10 minutes on why I have veered away from low cap stocks and more towards the high cap channel trading strategy, because you're able to mitigate that portfolio risk much more efficiently and much more stable wise than you would trading a penny cap or low float stocks. Do I share my charts for Thinkorswim? Like my setup, like how my charts are all set up and stuff. I actually have. I'm going to do that. I'm going to build an entire section in my Discord channel of all the studies that I use, my screen setup, all the little scripts that I use, and then kind of run through and probably make some videos of my current strategies. Yeah, I wouldn't mess with your IRA, Cody. It's probably a smart move. If you can't, I tell everybody you need to be able to turn $1 into $2 before you can turn $1,000 into $2,000. It depends on how long you've been going. Actually, I need to stop talking and focus. Let me find. Yeah, you should definitely spend most of your money on education and SQ. All right, we might be having a short trap on this Q, which is nice. I want to see it come back down into that channel, but this might be a channel break. And I will be right back. Morning, Yos. You should have your founding member and PFNG now as well on Discord. Okay, drip. Should have stayed in my J-Nug swing. Gosh, Tesla. Tesla. Like to see Tesla get up higher before I get into it. Let's check out Gush alert. Let's go back to MU. MU is breaking down. I'm going to get out half on MU just to lock in my profits. Going back up. We're getting lag every morning on oh, no, I did not want to sell two. All right, looks like I'm out of Gush for $70 profit on the swing. Twitter, cracking. Tesla, cracking. K-Web's way high. AMD. No trades today on the open. SQ hopefully will come down. Thanks, Eric. Rip is cracking back down. Check out this gap fill, see what it's doing. It's coming down. Yep, I saw that, Yos. Thing's already up 100%. I'm actually going to set an alert on this penny stock. I would play it after the 15-minute mark. If it gets above the 1130s, I will definitely play it long up to the 13s or even the gap fill up to 18. I probably should have checked the news on it to see why it's gapped. All right, Gush is coming up. Yes, it is a Thinkorswim. MMU. If that comes up a bit more, we can get into it. AMD doing nothing. Use cracking. All right, so there's no good trades. Today is going to be a day of patience and practicing, not chasing the money, not chasing trades, not taking bad trades. You can still have a good day trading by not doing anything, and that's practicing your principles of not jumping into bad trades. GMP, all right, GMP's climbing. Got a red to green move. That's good on penny stocks. Up at the high 1136, 1120, 15. Back down below the open. $11. I haven't studied Forex at all, Daniel. It's something I eventually want to get into, but haven't studied it. Hey, insurance. I've been studying protective puts. Protective puts. What are they called? Protective puts, covered calls, and collars. After we talked about options yesterday, there's just so much to learn about options trading. Tesla's cracking. Damn, I should have got into Tesla. I wish I could trade pre-market. You know, I would love to play these channel strategies on the pre-market would be nice. SQ. SQ's coming down. Okay. I'm gonna wait for a pullback. Get into SQ. What's our range? 61, 58. $4 range, $50. Let's do 25 shares. Getting a pullback. I really don't like that my charts are not in sync on the 2-minute and the 5-minute. This line is not the same as this line. Really, why can't I short things on Thinkorswim? This happened to me the other day too. I couldn't short SQ on Thinkorswim, but I can on my live account with TEFS. Damn it, Thinkorswim. It's a paper account. There's no, just let me short it. It's a paper account. It doesn't need to be share shorted. All right, whatever. That was an entry around 625, so I'm just gonna write it down. SQ short 625, 25 shares. All right, so we'll write a little note here. 25 share short. 25 shares short. So comes up at or above. Get an alert when it comes down to yesterday. High, create at or below, and we'll keep watching. Everything's mid-range today. Twitter would have been a decent short. I just don't know anything about them. I just gotta learn them. You can synchronize charts. Synchronize charts how? Are you talking about with options? Oh, VTRX. Getting a long trap, potentially? VTRX? No, it's already cracking back down. The range, $22. Full dollar range, okay. Full dollar range, we'll do 50 shares. Build. Why did my VTRX alert not go? Apple Suite. I need to check Apple real quick. Apple. Going long or short on Apple? Oh yeah, it's pretty decent. All right, so we got into VTRX. VRX. All right. I wish I would have stayed in that JNUG swing. Damn it. Oh well. Another day. Yeah, you got a nice pinch going on Apple. That short trap there on Apple would have been nice. Going long. HMMY. Yeah, I don't like that setup. I've seen HMMY a lot in penny stocks. EMP, yeah, break it down. Getting a pullback on Tesla. I don't want to get into it. It's not enough of a pullback. Drip still cracking. Set our alert just below the low. Crack. Oh. Crack had a huge crack down, and then pull back. Almost back up to $13.70 to $13. I might short this right now. 70 cent move. Yeah, 70 cents per share, $70. Let's do 75 shares. Get in. Damn it, Thinkorswim. All right, so I tried to short at 70. I would have got filled for 75 shares. So we are going to set another alert. 25 shares short, 13.70. Gush. Alert, gush. Almost up to the top. Back to frac, set my alerts. Oh, no, head above. All right, so we got 3 trades going. 2 of them are paper trades, actual paper trades, because I can't short them on Thinkorswim. Gush, getting on its high end. SQ is breaking down. Good. So we're green on SQ. Let's check out drip to go long. Drip's getting down there. Still got a little bit to go. And now if I had my TFS account, I could short gush. Yeah, HD way on the high end. Getting for HD on there. Drip's still coming down. The length of this channel. 1, 2, 3, 4, 5, 6. This is the 10th day on this descending pattern. Yeah, you should already have. Yeah, you've got quarter 3. For those that have not gotten the Discord channel invite, it's right there. SQ. We're in the money on SQ. We've already made red on frac, we're on drip. Okay. Throw a drip on here because we're probably going to trade it if it keeps going. Set a buy order, edit. What's our range on here? $5.40. So we'll do 100 shares. That'll work. Was that alert? I edit this alert. We're gonna do 50 shares starting out. No, 25. I don't want to get in full because it could go down on the bottom of the channel. Went ahead and got 25 at 61. Just because there's a lot of resistance there. level 2s. SQ. SQ still going our way. Frac. So do you do protective puts insurance? Do you go long in the stock too? So you do you're doing uh collars then. Morning, Laura. Nice bounce on USLV. Laura, if you checked out Yen and K-Web, missed the bounce, missed like a $2 bounce on $3 bounce on K-Web going long. My alert missed by like 10 cents. Like 5% on K-Web, Yen. 10% on Yen, one day swing. If frac breaks 86, I'm getting out. Yeah, I'm about to play drip long, Laura. I'm already in at 25 shares. I'm going to stack my shares as it goes down. Gosh, is long trapping. I wish I could short it right now. Yeah, Jonas, that's what trading really is. Contrarian trading. So Mac taught this, but contrarian trading would be like this right here on this channel. See how when the stock spikes up above this on a bullish channel, this is basically a trap for newbie traders. So newbie traders see this huge run up and they see it just going bullish and bullish and bullish. So they'll jump into this stock thinking that it's going to go up even higher, but it's already on an ascending pattern and it's overextended itself on the ascending pattern. So you can look at this channel as a rate of increase per day. That's what it really is. So from this day to this day, 41.12 to 40.80. That's like a 30-cent per day rate of increase, but it's overextended itself here. So a contrarian trade would be to short this gush. Even though it's a bullish channel, you've got this overextension here, so you short it here and contrarian trade the channel down for a profit. And that's, if I could do it, I would do it right now on gush. Because it's that would have been a 30-cent short right there on this breakout. It's doing almost exactly what it did 2 days ago. So you have this big rip right here on the open. It's breaking up above its channel, and it's going to come back down later in the day. IMU. Is it an IMMU? No. All right, IMMU is getting high on its channel. All right. Frac is now going our way. I should have sized into it in the 80s. SQ's reversed on us. I'll let it run out though. It's got some room to taper. Forex trading, it's pretty much all technical. You have channels and there's all kinds of strategies you run and a lot of automation since it runs 24/7. The benefit of Forex is you don't get gaps. You don't have the pre-market and after-market hour trading and gaps. Oh, that's a nice. Damn, that is a huge overextension. IMU is getting up into the high 50s. The range here. $1 range. Get in 12 shares short. Frac. All right, frac's going our way really well now. All right, we got in 12 shares on IMMU. Drip is rebounding. Looks like we didn't get filled in the 50s. We're on a light size right now on drip. RX is a little red. Bad. Oh, wow. $2 move. I'll short CLEG. Yeah, nice crack on HD. That big run up. Right at the 200, almost at the $200 mark, or the no, perfect bounce almost at 199. Damn, 10-point move on HD. Pretty low volume on HD though. I don't really need to, guy. The channels work fine for me right now. Oh, penny stock, yeah. That's really nice volume. I get out of it. It's hitting resistance. SQ's breaking down again. Cracks consolidating. I'm going to go ahead and short another 12 on AMU. Up $160 overall. I fucked up. I screwed up like a $30 options trade. So I'm actually up like 190, almost to 50% growth on portfolio in 2 weeks. 190 divided by 500, 38%. So almost to 40%. Really interested to start tracking my trades and figuring out my win to loss percents and stuff, and then increasing my portfolio risk so I can start making even more money, because this seems to be a pretty good strategy. I need to write down. Well, actually, I can do it in the work on the trade log a little bit. So let me set my alerts quick. VTRX. We got alert here. Set a 50% alert on VTRX. Yeah, I've traded live money before. I have experienced the emotions and stuff that go with it. It's mostly just being a good trader is a lot about feeling confident in your strategy. And I've traded this strategy on TEFS Trader for profit. I've traded we got into CELG. I've traded it green on Thinkorswim. So yeah, I'm feeling pretty confident on it. We got a 3-point range on CELG. Hitting resistance lines. We're in 5 shares. We got a 3-point range. That'll be $15 total win. I will get in another 5 shares for a $30 profit. Why don't you let me? Edit. Yeah, it's all about proper management. I think my risk management's pretty solid. All right, we got in at 75, another 5 shares. See if I can get in another 5 at 80. That'll be my full entry onto CELG. All right, so we're in our full size on CELG. Set an alert at 79. Then just above 79, our stop loss will be 81. Out. It bounces off of 80. I'm fine with that. But breaking above it, I don't want to see. Back to PTRX. We got our alert set, SQ. We're green on SQ, but we need it to break down. Frack's at yesterday's open. Is that what that line is? Short 70 shares at 60. We're in 10 cents. So we're up $7 on Frack, even though we can't see it because it's a paper trade. Set an alert. Creating highs or lows. Set an alert here. Here when it breaks below. Strip's probably going to come back down. It tends to do that. We'll probably see it pull back down to the resistance. MMU is still going up a bit. Our average is 58, 24 shares, 1 point full move for $25. 66. That's fine. If it overs, we're getting more. Set an alert in the 80s. I'd like to see it bounce on the $0.25. Come back down. 25 shares at $0.25 loss. I could let it run to 24 and bounce and buy it or short it again. Buy it, pullback. Yeah, I prefer to buy bounces, honestly. I like the bounce plays. Getting into it early, small size, and then stacking on the descend like this. So trading CLG, I would have started close to support and maybe added to breaks. Yeah, bouncing on the whole dollar. My average is 71, which is pretty damn low. I'll add another 5 here. Ah, I missed it. That would have been a nice add in the 90s. Yeah, like these parabolic moves right here. A good pullback strategy would have been catching this almost full. Is that a full point move? 78, 26 to 79. Yeah, so over a full point move. Seeing it spike here and then buying on the SAR parabolic, the bounce right here at the EMA and the SAR. So looking for, hold on. So 79.06 to 50-cent move here. 100 shares would be $50 right there on that pullback. ELG. All right, I'm gonna short here on the ask. Another 5 shares, so that brings my average up to 78. Frac is coming back up. It's bouncing off the SAR, that's fine. See if it breaks above my stop loss. Go back to CLG, manage this trade real quick. We're starting to get in this kind of heavy. We got a big run up already from pre-market. Yeah, I don't like break trading too much. I'm not very good at it. But pullbacks, I love pullbacks. Pullbacks and bounce plays are my go-to. But yeah, this 50-cent trade here at a whole dollar mark with a 60-cent bounce, buy 100 or 200 shares here, sell in the 50s, you make 50 or 100 bucks within 4 minutes. Frac is super parabolic today. Still looking fine though. Set an alert above today's high. No, you can make money on the profit. The pullback play on CELG would have been the first rip leg up to 9:42 a.m., 9:44. Then you have the pullback down to the 20 EMA and the SAR parabolic. buy at the whole dollar bounce at 79.05 and sell it for the rebound up to the 50s. So a 50-cent move right there within 2 minutes. That's an easy pullback play. Now, yeah, you could stay into it and let it and run the second leg. So it's on the second leg right now. But typically the second leg fails. But you could get into it. Yeah, you can play pullbacks and breaks multiple ways. You could do a double strategy where you get in double leverage at the whole dollar bounce. So like 200 shares, you sell 100 of them here at the 50 for instant $50 profit, and then you anticipate the break up, sell the next shares at $79 for 100, so $150 total profit. Yeah, if I want to play a break trade out, I want to get into it here at this first pullback, and then usually I'll downsize half when it bounces. I like playing these scalp trade. I consider this kind of scalping, a quick 2-minute pullback rebound. The more a stock rips up, the better, because you have a stronger pullback. That looks to be like a 61% pullback. Let's fib it real quick. Low. Yeah, almost a 61% pullback. So you play this little channel, this 2-minute point right here. So that would be my pullback trade right there. Buy on the whole dollar bounce, sell at the half dollar rebound up to the previous high and low, because it's set its high already on the first leg, and then you get the pullback on a whole dollar at the 61 fib, and then sell it back there, or you hold half of it for the second leg breakout. IMMU. Yeah, you got to be very careful with pullbacks and stuff, because typically the more volatile, the better. I like on pullbacks. I don't like small pullbacks because it's like parabolic choppiness. I like massive whole dollar rips and then playing those pullbacks because they're much more stable, or at least they seem much more stable in my opinion. All right, IMU, we got an average of 58. This is the second leg on IMMU. We're in 24 shares. We're in the 80s currently. This is looking to be a new trend channel, possibly. So we're gonna channel this real quick. Well, I've been studying for 10 months. I don't know if I'd say that's fast. I try to study as many different types of trading as I can and then build my own strategy. I'm going to average. Yeah. Yeah, it's definitely, people don't take that into account, the older traders. There's just so much more information out there for a new trader to become profitable. Gonna do another 25 shares at 23.80. What's the high? 5 284. Try to get in, average up on this leg. Should be seeing a pullback. Just have to be patient. SQ. That's really my biggest issue on this strategy is patience. Drip back, came back down to the low. Probably going to break down into the 50s. Set this next target. 3. Gets into the 40s. I'm going to get out and then re-enter in the 30s. IMMU. So IMMU is about to hit the SAR parabolic. It's probably going to be reversing pretty soon. I don't see it making a third leg. I'm just going to get in it now. IMMU. What was that alert? Shit. CLG is breaking 80s. The next move is I'm in 20 shares, $6. Second leg, third leg. Yeah, I need to rewatch the entire Tasty Trades. Okay, let's work on the Frack's breaking again, south. Work on the spreadsheets. All my alerts are set. Yeah, that long right there would have been nice. CLEG. I get in. I just doubled my size, 40 shares into CLEG. Average 92. Pretty heavy exposure, but I'm looking for a breakdown into the. It's making new highs, and it could run. Yeah, I'm downsizing my exposure. I'm gonna stick with these mid cap stocks. I'm gonna run a scalp real quick on this. We're gonna go what 25-cent scalp, a 10-cent scalp. Let's do 200 shares. But come back down to the low teens. Uh, want to see a pullback to the EMA. Gets back up to 25, I might short it. Try to get in at 21. Got in at 21, 200 shares. Looking for a pullback down into the teens for like 20 bucks scalp. It's not been too good. Come on, break down. No, you want to come down. I'm currently red on CLEG. Come on, come down to 10 cents. Do it. You know you want to do it. There we go. It's coming down. There we go. On. Yeah, I started with like half share. My total entry was going to be 20 shares. Um, now it's starting to break down. So I started with 5 shares at like in the 70s, and then I added 5 in the 80s and 5 in the 90s and 5 in above 80. But it come on, come down. There we go. 10 cents. Yeah, down to the whole dollar. I'm gonna take half my profits here on the scalp. So we locked in $10. I don't know if it's going to come down to the 80s. Yeah. My risk calculation is 3% of my portfolio, which is $15. I'm starting with $500, so my risk is $15. That's 3%. So I calculate my share size based on the range. So this is a $3 range here. So 3 times, if it goes the full range, um, and I want to make $30 on a $15 trade, you take 30 divided by 3, which is 10 shares. So I actually doubled my exposure at 20 shares, so that it would have been $60 profit. But I like this strategy enough that I'm kind of confident with double exposure, especially on a stock like this that's naturally descending. Coming back down more slowly. It's not looking like it's coming down to 80, so I'm gonna lock in my profits there. I'm still short 20 shares. Gonna go long on a scalp. See if I can get it filled at 9 cents. No. Didn't get filled. There would have been another $20 if I gotten filled. Back up into the 20s. A short again. 21. Down to 18. 17. Getting a lot of volume at 20 cents. We got solid 25 cents. All right, we're breaking out again. I'm out. So lost that profit that we made on the scalp. We're breaking the 25 mark. I should have stayed in it. I should have went long at 10 cents because it's the overall trend is bullish, so that would have been a better trade than trying to counter trend scalp. No, I'm trying to short the range on CLEG. I'm looking for the breakdown, but it'll probably run up to the 80s or the 50s, and I'll get into it there. Do I trade double bottoms? I will. Depends on the setup. My trading fees with TradeNet's like $1.50 per trade, something like that. It's super cheap. Let's check out my other trades. BTRX. Yeah, well, I'm practicing the scalping more for when I have higher share sizes. So when my account's like $10,000, I can scalp 1,000 shares, and it'll be an instant instant $100 on a 10-cent move. So that back down in the 19s. I'm going to go long on this. I'm going to stop counter trend trading. Bought in at 20. Looking for it to go back up into the 30s. My average is 23. I was hoping it was 20. Yeah, Clay Trader. I like watching Clay Trader's videos. He has a very interesting style. View. Shit. I'm gonna have to close out this. It's too dangerous to stay in this. 180. So I need to check IMMU. Oh, IMMU is breaking. IMMU is about to hit my. So my profit loss for the day is $15 on any trade. So if this hits $15, I'm gonna get out of it. Breaks the $24 mark, I'm gonna get out. Hopefully it'll bounce on the whole dollar. Get back to CLEG. We're getting a small range. Let's do 300 shares. No, not 3,000, 300. I want to pull back into the low 20s. I don't go long. Do I trade IPOs? I do not. I like charts that have I can look back to the history and predict what's going to happen. There would have been 20 bucks. Yep, I should have just stayed in my 200 shares. TOS does anything TI can do. What do you mean TI? Getting into the 40s. Trade ideas. Yeah, I haven't used trade ideas. I'm used to going red. 3, I'd like to see it hit 50. I'd short at 50. Check the daily real quick. We got another full point move up to the 50 EMA on the daily. So if it breaks this resistance, it's got nothing else to stop it up until 81, 38, or 33. Hitting 50. I sold at 51. 49. Looking for a pullback. Low 40s. 300 shares. Should be 30 bucks. Or this is not liking to break down. It just keeps making higher highs. 6. Reverse. I'm just going to let it run. Need to stop counter trend trading. 60. There we go. selling at 61. Wait for a pullback. We'll get back into it. Yeah, this CLEG is just powering through everything. It's not a good scalp trade. It's not doing parabolic moves. Like, it's not the type of pattern that I should be scalping on, especially for a counter trend scalp. All right, we got in at 65. I wanted to get in at 61. That wasn't a good entry. Thinkorswim. It's the software I'm using. There's the pullback. Go to 50, flat 50. All right, 50. I'm gonna go long on 50. $40. If the SAR parabolic flips, I'm getting out. I need it to hold at 45, 43. Yeah, it's if it hits 30, SAR is going to flip and I need to get out. This is a good lesson on terrible trading. I shouldn't be doing this. SAR parabolic starting to flatten. There we go. It's back up to 50, 52, 52. 3. IMU. IMMU is going my way now. 3. Need to zoom in more. All right, I'm going to get out. Break even. I'm not liking the setup. The SAR parabolic's looking bad. Stock's already very overextended. Okay, IMMU is going my way. It broke down. It's back into its channel. Rip. Climbing. It didn't get filled in the 30s, unfortunately. Let drip run. SQ. SQ is going to be moving soon. Let IMMU go. 23. Average 68. Not looking for too much profit on this, really. Looking like it's got a trend reverse or trend change. We're at the 50 mark. See ya. Insurance. All right, so CELG is breaking down. I'm gonna try to get in at 37. See if I can get filled. Filled at 37. Yeah, I'll eventually get something set up for that. I'm gonna go long here, 37. I'm trying to figure out this pattern. This is a very odd pattern for scalping. Yeah, I've been thinking about doing Twitch. I'm gauging how this live streaming is affecting my revenue on YouTube. And I also don't want my YouTube channel to be cluttered with like 1,000 videos as well of live streaming. I wish YouTube would let you organize your videos better. Um, I'm trying to figure out how to scalp this trade. I'm seeing a lot of potential profit in a pattern like this. I'm playing short and long on this. Overall bullish, but it's overextended. It's going to be flipping soon. It looks like it's so it this thing had a clear transition period on the open on the 2 minute. So we have a I like the way this chart looks. We have a big rip here. I'll just do it this way. So we have this rip here up to 79.62 and then a pullback to the EMA at a whole dollar flat, and then it pulls back up here 50%. If I played a scalp here for like 200 shares from this pullback EMA bounce on the whole dollar to a 50-cent bounce, this 50-cent range here on a second leg, that's a 50-cent move on 100 shares is $50. 200 shares would be $100. 400 shares would be $200. But if I scalp played this, managing the trades on the highs and the lows and the breakouts, the potential profit for a pattern like this is ridiculously good. I could, wait for the pullback and the bounce of the EMA, go long, sell here, wait for another pullback, go long again, sell here, and each pullback to the EMA and long is potential profit. I need to figure out how to create a scanner to find stocks that have quick breakouts. Like what increase is this? It's a 1% increase. I need to figure out if there's a way to scan for stocks that have moved a dollar amount. All right, so it looks like it's about to break down. We'll see. Got a descending triangle going. Yeah, I'm failing at. Usually, I'm pretty good at scalping, but this is not a pattern that I'm used to on scalping. This is the first scalp trade I've done that's been red so far. But what I'm talking about basically is I want to size into a trade with a scalping style, but go long for the momentum of the day. So, your portfolio is heavily exposed, but if you manage it correctly, you could make a lot of money trading a pattern like this. I could make 100% profit in a day on a pattern like this if you play it correctly. You could also blow up your account though if you don't do it correctly. Uh, okay, I'll read that in a second. I want to manage this. Looking like creating lower lows. I want it to break this resistance. I want 2 candlesticks closed below the EMA. Short 300 shares at 33. Breaks the EMA and goes back up to 40. I'm getting out. Yep, there it goes. This candlestick needs to close low. And a lot of buying volume. Lots of buying volume. Buying volume's failing though. Price isn't moving. I think a lot of longs are going to get squeezed here. Yeah, I'm getting a lot of longs getting. I need to turn on my eye tracker. So look at the volume. Oh, if my eye tracker will work correctly. Lots and lots of volume there. But the price action's not moving. There we go. Did this real quick. High and low. We got plenty of room to run down into the low 70s. No, I've been fighting CLG all day. I probably shouldn't even be trading it, but I'm trying to learn this pattern. I'm trying to right now. I'm trying to build a strategy on this pattern. I'm trying to play with a scalp amount of size, but play it long for the day for a lot of profit. I'm in 300 shares, which is a very heavy share size for as much range as this thing has, and it's very dangerous to trade like this. But I'm just testing a new strategy to see if it's something that would work. I don't think this thing is going to break down based on the star parabolic dots. So this is a bump and run strategy. I want to wait for this to pull back, and I'm going to get out of this. I'm not liking it. Back to break even. I'm going to short this. I want to short it on the high side of 30. All right, we got in at 37, but it's looking like it looks like it's going to pull back up to the SAR. Yeah. So it's cup and handle. Yeah, I'm going to get out of it. Okay, let me read this real quick. Bump, run, reversal chart pattern. Price action then reverses. Okay, so you have a cup and handle up to, that's exactly what it's doing right now. Cup and handle. It's almost the exact pattern. Type of bumper runs, bumper run pattern. Very strong. Okay, so you're looking for a big bull run, a cup and handle, and then a trend down. We're getting a flag right now. Yeah, so it's looking. Damn, I should have shorted that in the 40s then. We'll wait for a pullback. So we're getting a descending right here. I'm gonna wait for it to pull back up to it, then short. We've got a major overextension already from the open. Got 60 cents to move. High AV. Was this? It's not. Okay, here we go. Short this here. 80.39. Okay, so it's gonna have a steep impulse channel. Channel 40%. Yeah, that's a pretty damn steep run. So bump on the chart today would be steeper. After all, it's trend impulse rate. Angle of bump. There we go. It's breaking down. Bump 40 bullish trend. The run. Trade volume bump run pattern sizes. Okay. What is that? 22%. And that's previous days. Now, this is an easy bear bull trap. I just gotta let it run. ETRX is going my way. Super choppy on SQCLG. Oh, just ripped up. Damn it. All right, so we're at 50. We're way down. This is a terrible trade. I've lost pretty much all my profit. I'm already in it, so I'm gonna cover my profit. What? Yeah. Oh, my buying power is below. Fuck. Come on, let me short it. It's such a huge run, it's gonna pull back. I just want to cover. Okay, so this is an interesting pattern. Should not have been trading it as heavy as I was. So this just pretty much wiped out the 2 weeks profit that I made. I do believe it's going to break down. This is forming the bump and run pattern that Jason just sent me. So you look at this pattern right here. Huge run up, which is this run up here. Then you got cup and handle. We're getting a cup and handle right now. And then it's going to pull back down. So my stop loss, I'm down a lot right now, but I'm going to manage this trade. My stop loss is going to be above high. This is typically when you see a lot of high runners like this fail on the second bump here. So this would have been a good entry. If I could short this, I would here. Let me see if I can short 100 shares. So I've shorted 100 shares. So I've averaged, this is very dangerous to do, but I've averaged here on a, the only reason I'm averaging here is because this is a double touch and it's not even hitting the total high. It's stopped in the 60s. It should be coming down just as it is. So by getting that 100 shares up there and averaging, it's equalized. My exposure is double, but I've equalized my loss on that bad entry. So right now I'm purely in trade management. I do believe this is going to break down. I don't think it's going to break $80.70. I'm not profit. So right now, if I could have gotten filled for that 300 shares, I would have. I would be profitable right now, and it looks like it's going well. So, all right. So now we're good. My average is 44, so we are green. There we go. There's the crack. Now we're going to start running down. A huge bearish engulfing flag. Looking for it to run down to 80. I wish I could have got in even heavier at the SAR parabolic touch. My mistake was trying to get in it early here. My entry should have been in the SAR or nothing. So I'm up $107. And now I want to reiterate, this is a super dangerous trade. I'm trading a pattern that I'm not familiar with. Heavy size, terrible entries. I was fighting it the whole time, so psychologically, I'm already pretty taxed. You don't want to continuously trade something that you're losing at, which is what I've been doing. But I'm only doing it to try to learn the pattern. I would not do this with a live account. I'm okay with making mistakes on a paper account if it helps me learn the pattern and the way it moves. Okay, so we're down to the low 13s. That's the 70 fib. I'm going to let it run. I'm looking for it to come down at least to $80 hole. I'll take half profits at once it gets below 10 cents. I'd be up about $200 if I could have gotten filled at that better price. Might be having a pullback. creating some support and resistance. Getting a channel going. Consolidation channel. Let me check my other trades. This one's looking good. VTRX is breaking down. Good. We're up. We've already hit our one-to-one profit margin. SQ is breaking down. We're green on that. We're green on FRAC. FRAC's going to be cracking soon. Drip, we're green. IMMU, we're green. Everything's green. All green today. A little nervous on this trade. All right, it's back up into the 20s. I'm gonna go ahead and lock in half my profits. If it pulls up again into the 30s, what's my average? 80, 50. EMA is at 30. I expect a pullback up to the 30s in this resistance line. So I may reshort it here. They've at 80.06. Yeah, it bounced almost perfectly off the 78 fib, but I expect it to come down to at least the 61 fib. Go to the 5-minute chart. Well, if I go back into it, I'm only going to go half shares, so my average will be it'll be in the 40s. I don't want my average to come down too much. We got 28 was the high. See if it keeps climbing on the pullback. I'd like to get 30. EMA is 31. Our parabolic angle is about 25 degrees. It's pretty decent. I really like this pattern. I wanna trade this pattern more. I need to figure out how to build a scanner to find stocks that have whole dollar rips. XLRN. I don't play stocks like this. All right, so getting back up into the 30s. I'll short it 28, average of 43. If it breaks this support line, I will get out completely, take my profit, and I'll wait for it to pull back up to this trend channel, and I'll short it again back down to this low, on this new low on the fib. Oh, I forgot. I got a lunch. I got to meet somebody for lunch today. I'm only going to be able to trade this for another 30 minutes. I'm not going to stay in a unmanaged trade with this amount, with this share size. Oh shit! Shouldn't be texting while I'm trading. I'm looking for it to pull back onto the support line. I'll cover my call, cover my come back down. Crack. I'm just going to cover my half right there. My average is 40. This is either going to be a wick and a fail back down, or it's going to pop right there. Oh shit, no, I did not want to go in double that. Damn it. 300. Meant to buy, not sell. Back down. Really need to work on my hitting the correct buttons. Okay. There we go. Come back down to the EMA. All right, getting out there. We're in 150 still at 34 cents. 50% off the last high and low. Yeah. Yep, that is 50% off the last high and low. Create a price line. This is the 50 right here. And this trade has been all over the place today. I was up $100, down 160. Break even right now. We do have a trend channel going this way, so it needs to break that channel before I do anything else. Yeah. Now that I've played this pattern at least, though, I'm gonna have a much better time playing it the next time. Like I should have waited for the double bounce short here, immediately take profits at the 70, wait for the pullback on the 50, re-short back down. That would be really good money. Really, really good money. That was a 50-cent move, 300 shares, 150 bucks there, another 300 shares here, or play it long here. Actually, I probably wouldn't play the bounce here. I don't know. I might if it consolidates and confirms. 15 cents to 30 cents on 300 shares. It's another 50 bucks there. All right, so we're cracking, and then play it short here for another 30 cents. Yeah, somewhere that'd be like over 200 something dollars profit for the day, and that's not including playing here. I could play the run up here, wait for the EMA bounce, go long 50 cents there, go long here 50 cents, go long here again for another 50 cents. So the potential profit for being able to play every leg of this pattern is really good. Stat tracking this would be a nightmare, though. I would have to, when I log this, I'd have to separate. It'd have to be one sheet bump and run, but I would have to identify, this trade is the first EMA bounce, the second EMA bounce, second leg breakout. Then I'd have to, short. This short would be from here to here would be a different tag. This would be a different tag. Like it'd be very frustrating to. Yeah, 100%. But I've seen this pattern before. I've just never traded it. You see this pattern. This pattern is very similar to penny stocks and low cap stocks. So I've seen this a lot in the low cap trading. So we scroll back. Penny stocks and low caps, they break out. They have a huge run up, pull back to the EMA, bounce, and then they have a second leg up. Warrior trading, he loves to trade these breakouts right here. This is like his bread and butter, this little move right here, and then a pullback, and then he'll wait for the breakout on the second leg, wait for the pullback to the EMA, and then he'll run this long up in here until he feels that it's going to flip. So you can wait for the bounce here, play this EMA pullback long back up to the high. You could short it again because it's only the second leg. Usually you don't get a breakout on the second rebound. Short it here, reverse long for a bounce again, and then get out and just wait and see if it's either going to break down south here or if it pulls and breaks again, play the second leg, EMA, pull back, bounce, run it up, and then wait for the cup and handle and short here, play long here, and then go long for the 50 fib bounce, and then short it for the rest of the day. Yeah, psychology is a huge part of trading. Yeah, I can't watch his videos because all he does is watch level twos. Like I need candlesticks to at least follow what he's doing. Like I can read I can read level twos and see resistance lines and stuff, but his is on like a whole new level. Wish I would have shorted on that 50 fib. I didn't see that 50 fib bounce until you called it out, Jason. Check out my other trades: VTRX, green, SQ, slowly moving, crack, green, drip, green. Drip's probably gonna IMU. We short IMU? Yeah, we shorted IMU. All right, I need to manage this. Is this going to break down into this channel? Is this a bull trap? Looking like a very similar pattern to what we just looked at. Huge run up, pull back, bounce, rebound. 48 shares. I'm going to go ahead and just close out my, I'll take my profit here. Because it is in a new channel and it's already pretty low. It's too risky. It's not technically a bull trap or bear trap because it is a descending pattern with a bullish trap. That could be a trend reversal. CLG, we'll let drip run long frac. Frac's halfway on its range. I'll go ahead and since this is a paper trade, we'll just do a little note here. Now I'll just sell it out here. So sold 54. Sold 13. 54. Our entry was 70 cents. Okay, SQ is coming back down. I'm not going to play that. Oh, no, we're already in SQ short. I forgot. Okay. So 20 cents on 75 shares, about 20 bucks, somewhere around there. SQ is also green. Yeah, that is true. It is Friday. ELG. I'm going to let CELG run short for the day. My stop loss is $34. I will set my stop loss just above this. So 150 shares. Shares. No, did not want to get out there. Damn it. That is not what I wanted to do. How do I do a close of oh no, I need to do a buy stop. $50, not a limit, stop. That screwed up some profit there. We'll do just above previous. No, we'll tighten it up. We'll do just above this trend channel. Actually, can we do a trailing? Price at 11 cents. 50 cents off the range. Yeah, we'll do 50 cents. Let's do 45. Market trailing stop. Buy. Plus 45 cents. Okay. Is that correct? 45 cents. There we go. Okay. So trailing stop 45 cents above. It should follow the trend down. I wish you could set a decay on your trailing stop as the day goes on. So, like, I want the trailing stop to be 10 cents by 4 p.m. instead of 45 cents. So it slowly closes in on the price as the day continues. So that way you can take your profit more accurately as your trade confirms the trend. That would be a nice function. There is a function like that. Oh, you have to program it. Okay. That would be awesome. You. BRX. BRX is coming down halfway. Got 50 shares of BRX. Sell out half. Some resistance there, but major resistance there. Sell. No, I did not want to sell. Okay. We're back to original position. Why? This is really annoying. Why will Thinkorswim sometimes let me edit my buy orders, and then other times it's like, nope, we'll just send it, auto send. Here, replace order. We'll sell half here. Sell the other half down there. You. We'll let SQ run. Rip. I'll sell out half here on drip. Yep. Yeah, that's annoying. I'll just let drip run. Okay, I gotta get off here and get ready. All my things are set. All the trades are green. I'll have to calculate the profits on the paper ones. So far, we're looking good. We are up $204. That would have been like $300 something if I had not traded CELG so terribly. Almost to the 50% mark on our portfolio in just 2 weeks. I could probably go heavier on my sizing. my trades are pretty damn accurate so far. But yeah, we won't get crazy with it because this is still a demo account. I don't want to form bad habits for the live account once I start trading it. So we'll start small, keep it simple, document my trades. Got to figure out my password for my live account. That would probably help. And of course, I've not gotten an email from TradeNet because I never get emails from their support. We'll set a buy order here for half. Stop. What? It didn't even touch. This is Thinkorswim pisses me off sometimes. All right, so reshort there. Buy. Edit. Buy stop. Wait, no. Do we already have a trailing stop? Yeah, duh, we already have a trailing stop. I have to edit the trailing stop first. No, screw it. I'll just leave it. Mess with it later. Come back. No problem, Milton. I need to do some work on the Discord channel. And we need to start building. I need to start building a thing for us to actually discuss and work on things on the channel. So far, the server's not being used too much, which is just in its infancy, but I got a few things that we can do. A scanner is the first thing I need to build for finding these patterns. Discussion room for what, Jason? We have a few discussion rooms. Review calls, review trades, and then Max. But Mac's been gone. I haven't seen Mac at all. He hasn't messaged me or anything. I don't know what's up with him. General discussion is just the pit in members. This is the main chat. I probably need to write up a channels list to explain all the channels and how they work. That's probably the next on the to-do list for the new members. I've actually got it started, or at least I created the channel for channels. I just haven't explained it yet. And then all the little emojis and stuff. The Discord link. So if you're new to the Discord, you need to read through the new members join here part. The server is designed to be a ranked and tiered system, so that way new traders coming into the community can gauge how qualified the information is that's being given to them by certain people. The biggest issue I see with online trading communities is anybody comes in and immediately starts giving advice, and you don't know if that person's been trading for 2 days or 20 years, and obviously you don't want to be taking advice from somebody that's not qualified to give you advice. So this server is being built in a systematic way so that we can filter and screen the traders that get into it and basically verify and qualify their competence as a trader. So that way, when they're talking to you, you will know whether they are a competent trader or not. And you learn about that all in the new members. Start here, the intro, and this is like an explanation of why the server is built this way. And then the trader ranks basically explains the different ranks and what they'll mean. And then the engaging community is just an explanation on how you can advance in the community. And then eventually I'll have channels and server info, and also read the PFNG info as well. This will be how you get your PFNG rank. As a new join, you can't talk to anybody or join any voice chats. Your connections are extremely limited. So you have to receive your PFNG rank. And then eventually we'll start doing live chats too. I'll open up live chats to the different ranks at different days and different times so we can all discuss things. Oh, is that an expired one? Let me make one. Shouldn't be. Oh, maybe it is. There's the new link. All right, I gotta shut down the stream and get out of here. Nice trading with everybody today. I'll probably be building my spreadsheet tomorrow. I may live stream it, or I might just do it on my own. All right, see you guys.